Okay, so for this next video lecture, so we are still under the substantive procedures to audit the asset accounts. So the next asset account that we will discuss is the inventories. Okay, so here are the following substantive procedures that is usually performed by the auditor in auditing the inventory account. Okay, first is the auditor can observe the taking of the physical inventory, and he can make the test counts also to verify the existence of inventory, but this is for a limited extent only to determine ownership and valuation of such items. So normally an entity, they are required by some regulatory agencies to submit their inventory count. Okay, so that's why they must um, make this physical counting every year end. So during the entity's physical counting of their inventory, the auditor can be present and observe, okay, the undertaking of such counting. And aside from that, he can also make his test counts. Okay, um, but this is just to determine, okay, some samples, okay, to test if indeed the employees of the entity taking the physical inventory is doing the correct and proper procedure and valuation, okay, of such counting. Aside from that, in the physical inventory counting, the auditor can also determine the ownership of the entity over those inventory in their warehouse, even those inventory that is in transit or out for consignment. Okay. Because all of this can affect the valuation of our inventory account. So the observation of the inventory count is a generally accepted procedure. And please take note that if the auditor fails to make such observation, he has to justify why did he not observe the inventory counting. Okay, because again, this is very important to determine valuation and existence, okay, of the inventories. So during the inventory observation, the auditor will also seek to determine if the recorded inventory items do not exist or if they exist. Okay, so this is to address the existence assertion of the entity, meaning if the inventory on hand is uh, owned by the entity or is owned by the other parties. Okay, so the auditor can also determine that all items are recorded. So this will address the completeness assertion, and if the client has properly considered also the condition of the items. So this will address the valuation assertion, meaning if the inventory are not damaged, not obsolete, okay, and are um of and are um able to be sold, okay, or sold to the customers. So in that case, if the inventory is in its um proper and um correct or undamaged or not obsolete status, then they can be sold still. However, if they are not saleable anymore, so the entity might or will consider these items to be written off, okay, as an expense, or they can sell it at a lower price, okay, for some or other uh, buyers. Okay, so that is for the valuation assertion. Another substantive procedure that the auditor can perform is he can do the test counts, as mentioned also earlier in connection with the observation of the annual inventory counting. So here, um, the auditor can perform the test counts during the observation of the taking of the inventory, and accompany them to the client's accounts, or meaning this will be reconciled if the entity has recorded correctly, okay, the amount of the items of inventory that exists in their warehouse or vicinity. Okay, and subsequently to the accumulated inventory to verify the accuracy, count, and its accumulation. Okay, so again, this is to verify the existence and valuation and completeness assertion of the entity about their inventories. Another substantive procedure is the auditor can confirm any consigned inventory. So, for example, if inventories are in the hand of the consignee and inventory in the public warehouse. So, in this case, the auditor will determine, okay, if the entity has correctly recorded the amount of inventory that the entity owns, whether they are in their warehouse or out on consignment, or those which do not have the presence in their vicinity, but still they own, okay, such a particular inventory. So here, confirmation will be made by the auditor, okay, to determine if such items are indeed owned by the entity or not. Okay. Another procedure is the auditor can also review the cutoff of the sales, sales returns, purchases, its returns as well, round at year end. Okay, so he will make this procedure for the purpose of this is to verify if the transactions affects the inventory and if they are recorded in the proper period. So again, this is the purpose of cut-off, okay, to determine if the entity records only those transactions which pertains to the current period and do not uh, include those which pertains to the subsequent period. Okay, another uh, or aside from what we have mentioned about the substantive procedures in auditing inventories, so there are other types of substantive audit procedures that the auditor can perform as well. So these are the following. Okay, first, the auditor can test the pricing of inventory. So the purpose of this is to verify if they are valued at net NRV, or if that inventory and cost of goods sold transactions are also accurately recorded. Normally, for the pricing of inventory, this is lower of cost or NRV. Okay, so this will determine if the entity followed the framework, okay, in measuring the inventory account and its valuation. Okay, aside from that, the cost of goods sold transactions also, if they are accurately recorded, because in this case, the cost of inventory is different from its selling price. So here, it should be accounted for properly. Okay. Another is the auditor can perform analytical procedures also to test the reasonableness of the inventory. So the auditor can look on the other documents, non-financial data, okay, to support the assertions made by the entity. Next, the auditor can also review the disclosures if they comply or the entity complies with the requirements, okay, from the applicable financial reporting framework. The auditor can also inquire the management about pledging of their inventory and to verify the adequacy of the disclosure for such transaction. So the same with our receivables. Okay. Next, the auditor can also review the purchase and sales commitments to verify whether there may be a need to accrue a loss or provide any disclosure. Okay, because in this case, sales or purchase commitments are transactions which are not yet perfected. Commitment meaning it will be done in the future. Okay, so there are accounting procedures that are recommended or required by the standard, okay, to account for such transactions. So here the auditor can determine if the entity followed such guidelines and if they provided as well the disclosures required for such items or transaction. Okay, another is the auditor can also inquire of from the management as to the existence of consigned inventory. Okay, so this is the purpose of this is the auditor can verify the adequacy of the needed or required disclosure for consignment transactions. Okay, because aside from financial statements, disclosures are also required by the framework or the standard. Okay, next, the auditor can account also for all inventory tags and count sheets to verify that inventory has been completely recorded. So in this case, if there are a lot of inventory items handled by the entity, so the auditor can do sampling, okay, to test the completeness of these records. Okay, another, the auditor can also put and extend summary inventory schedules to verify if there are errors or clerical errors or if they are accurately recorded or forwarded. Next, the auditor can also reconcile inventory summary schedules to the general ledger, okay, to determine also if there are errors or if they are accurately recorded, because in this case, these amounts from the general ledger are used, okay, to present in the financial statements. Another is the auditor can also test the inventory cost method. So the purpose of this is to verify if that is in conformity with the framework, because in our standards we have the guidelines in how to measure and when to use a particular costing method if that is appropriate, okay, in the circumstances of the entity. Next, the auditor can also examine inventory quality and condition. So the purpose of this is to assess whether there may be evidences that suggest that this inventory are not saleable anymore, or if they are obsolete or damaged and not or needs to be written off from the account. Okay. And lastly, the auditor can also perform any necessary additional test of inventory obsolescence. Okay, this is to verify the valuation of the inventory. Okay, so if that is overstated, because some inventory might be obsolete and must be written off, or it should be, or the amount of it should be lowered. Okay, so those are the different substantive audit procedures in auditing the inventory account balance.